We believe 2023 will be a good year for Asian fixed income. With a more benign environment overall for global bonds and the tailwinds of attractive yields and recovering economies, investors should look forward to the year of the rabbit with renewed optimism. In today's global markets, investors continue to face a number of obstacles, such as recession risk in advanced economies. This phase of the cycle makes a strong case for investing in bonds, and Asia US dollar bonds stand out for their relatively low duration and attractive yields. Compelling valuations have also led to growing interest in Asian credit from China onshore investors. Given the yield premium that China US dollar bonds currently have over renminbi bonds, this strong demand may explain China investment-grade credit's relative resilience in 2022. In 2023, China credit is being further bolstered by the country's reopening prospects, as well as supportive government policies. China and Asian economies in general are expected to see higher GDP growth, as well as lower inflation compared to the West. Additionally, China is not in the same part of the economic cycle as the US or other major economies, and it is this lack of correlation that can be a potential benefit for our global investors. Asian investment-grade bonds are of higher quality than many other global investors may assume. This universe contains the huge and highly creditworthy business titans and quasi-sovereign institutions from developed parts of Asia. It also includes the state-owned and national champions from Southeast and South Asia, in addition to the Chinese state-owned enterprises and banks, which in many cases have strong implicit support from the government. Risk areas certainly remain in 2023. Defaults in the Asian high-yield space are expected to continue to be concentrated in the China property sector, but selective access to China onshore funding channels, as well as the much improved macro fundamentals of ASEAN countries, together with the strong local funding assets, should help keep the overall default rate at a manageable level without much spillover risk. While there is still some uncertainty as to the outcome for the performance of China property, the focus going forward will likely be on addressing the credit transmission gap, given that China has signaled the end of the deleveraging cycle for the sector. It should be noted that China property now only makes up around 12% of the Asia high-yield universe, so its impact on the market has decreased significantly compared to just a year ago. In a nutshell, this means that Asian high-yield now has more diversified and balanced composition. One of the growth drivers in Asia credit in the coming years seems certain to be in green, social, and sustainability-linked bonds. The issuance of sustainable bonds as a percentage of all issuance in Asia increased in 2022, and we should see this upward trend continue in 2023. HSBC Asset Management's Asian bond strategies are well positioned for the more positive background for both global and Asian bonds in 2023. At the center of our capability is our powerful credit selection process, which provides our Asian bond strategy with the ability to navigate uncertainty in markets while uncovering attractive quality investments.